In this series, we're growing a Robinhood account from $0 all the way to 1 million, and I'm showing you every step of the way how I get there. So today in the account, we closed just shy of $6,000. We were up almost 13% on the day, and that was really driven by the fact that Neo as well as Grab had a really strong move. Obviously, there's been a lot of volatility over the last week with the breakdown on both SPY and QQQ. And we've continued lower to that island gap that I talked about in our previous video. But you can see that I've repositioned the account a little bit into longer dated call contracts on both Grab and Neo. We're really bullish on the fundamentals as well as the technicals, and we'll get into the charts just here in a moment. And then I do have some Bitcoin put butterfly spreads. This is on IBIT. This is just a Bitcoin spot ETF. And then I also have some bullish flow that I like to follow. That's when there's a big buyer of options and it shows up on flow as unusual option activity. And typically that means that's either a smart investor or maybe they have some sort of like insider information. And that was kind of the case here with tech as well as FCX. If you've been following my other tracker, I do post all the plays in here and I do need to update this. So I will update it here. But Neo is our biggest position. About 11% move today. It finally got that breakout confirmation. A ton of volume showed up. And so I'm really bullish on Neo. Obviously, earnings are coming up on the 11th of March. So we'll see how that goes. But we have $2,000 in shares. And then we have $1,500 in options. And then going over to Grab, about $1,000 in shares. And then $1,160 in options. We're still down on this position. After earnings, it did sell off. So, there's been some volatility there, but hopefully this one recovers over the next couple months. But let's just hop right into, this is actually Webull. So I wanted to show you real quickly that Neo overnight is actually up another 5%. So China's just been stimulating the economy. China's been going up. Same thing with the Hang Seng. Neo has kind of lagged behind all the other Chinese EV companies and, like XPeng or Li Auto that are up like 50% or even 90% year to date. Neo is only up like 10% now. So hopefully, now that we finally broke out of this downtrend, we can see a push higher. And this trend is even more apparent on like the weekly chart and even this longer downturn trend. So hopefully we can start pushing up towards like that $6-7 range over the next month. And then of course with the earnings, anything is really possible there. But hopping back over into TradingView, we did have what I talked about in my previous video. Once we had this breakdown and we fell back into pattern, right? So we originally broke out. Once we broke back down into pattern, same thing with this trend line. If we go to regular trading hours, you can see how clean, once it actually sliced through that trend line, that we had that continuation lower to this island gap that was formed back in the middle of January. And then earlier today, I also posted that this bear flag was forming. So you can see these parallel lines. And then we did break below that level and head a bit lower. And then after hours, we are heading back south to this 589 level. Bulls need to defend that gap. Otherwise, we could fill the gap and continue to push lower if we even close below the gap, because we had that fake breakout, right? So because we fell back into pattern, that's a really bearish move. And it's possible that we could even come back down to this 582 level on SPY over the next week or so. There's still a lot of volatility. VIX is elevated. Price is going to move quickly over the next week. You could definitely size down or just even be patient and wait for a dip to show in the market, a more sizable dip. And the way that I would look for a dip in the market is a couple different ways. And this is like how you can time the bottom, right? Because, if you time the bottom over here and you just bought calls over the next week, you would have probably made, depending on how far out the money call options you bought on SPY, you could have made like 5, 10, 20 times your money, depending on how much risk you took and how long you were able to not take profit on the position, right? So sometimes you take profit too soon because it's like, I got to take profit. I'm up 200, 300%. So it's really hard to time, more so how high it's going to go rather than the bottom itself, which I can show you a couple tips. I've talked about it in my previous videos if you want to watch those, but you can see here on this bottom that was formed back on December 20th. This was right after the FOMC meeting, after they said that they weren't going to cut rates as often. We had that big drawdown, and then you see that really big volume candle come in, and that was a signal that the bottom, at least a local bottom, was in. This one didn't have quite the same move, but obviously this one was more driven by the fact of CPI data, PPI data of that week, and it came in actually less than expectations, and so that data point allowed for the market to push higher. And then kind of the same thing in March, right? We have Trump just pushed tariffs off until April. We were going to have them on the 4th, so we're no longer imposing those tariffs. But you're going to want to look for a support level, right? So like 589 already kind of tapped that level. If we do head back south, it's certainly possible that we could enter this gap at that 582.25 level, at least intraday. If it hits that level, it's a good scalping point. Like, it's going to bounce from that level. And then if it goes to like this 575 level, that was the previous support. That's where I'd be looking at more of like, okay, an actual bottom could be in. And one of the indicators that I really like to look at, this one I have favorited, but it's the Lowry up/down percent volume indicator. And you can see I already have it added here, but if I remove these other ones, you can see that when there's a lot of up volume, that can kind of signal that, now we're going to continue higher in the market. But same thing can happen on like a big down volume day, which is like a capitulation type move. So you can see it actually happen on the 18th. That was like on the FOMC. There's like a crazy move in the market. And then the next like 2 days, we kind of had like somewhat of a push down, but then we rallied from that level. So whenever you see a really strong down volume capitulation move that's met with a high volume candle, that's typically like a local bottom in the market. And then you would also want to see like a big up volume move on the day after you saw that big down day, because that means that buyers are actually stepping in or shorts are covering out. There's a ton of up volume, and then we continue higher from there, right? So you see that once we had this over 80% up volume day, then we continued higher in the market. So that was kind of like the sign that we would continue higher. And then obviously we formed like this somewhat of a bull flag actually, but this was like a broadening wedge that was forming from these trend lines, right? So there's a big broadening wedge that was forming, but similar to here, right? We had like that big up volume day. Once we actually had that gap up, this formed an island bottom, and then we had a push higher as well. Now that there's a big volume day here on the break back down, that was confirmation that we would head lower. And then, at some point we're going to have a big volume candle. We're going to be at a local bottom or a really strong key support zone at like 575 or even 582. Maybe there's some sort of news that will actually, reverse course in the market, and then we'll push higher. Maybe that's something with like the trade war, tariffs. Maybe that's, the Fed saying something about like maybe they're going to start cutting rates again. There's just like a few different things that I would look for us to actually find a local bottom in the market. And then looking at NEO, let's just cover a few of the positions that we're in. That's really what I'm looking at the market, obviously, is just looking at those support levels. If you join the Discord, I'll post it in real time as it's happening. I'll give you an idea of like, okay, Lowry's 80% down volume, big volume spike, capitulation move. We're at support. We're going to push higher. Everybody get into calls for like the next week. And, VIX is over 30. Selling is going to stop at some point, and then buyers are going to rush in. There's going to be a short covering move, and we're going to push higher. Everybody's going to make a ton of money, and then we'll move on from there. But let's just take a look at some of these other positions. So NEO did break out of that position. Look at the volume right here. It's just insane, right? Even on like the weekly volume, we almost already passed Did we actually pass? Yeah, we already passed last week's total volume, and it's only Wednesday. So I fully expect this trend to continue much higher. NEO does have some short volume on it as well, so that will also add fuel to the fire for us to push higher. I'm really looking at this $5 level. We're already there overnight. I'm probably going to push to this 571 level. If we get over that level, then 6 and even 7 and even this potential high from September of 2024 around 775 to $8. That's really where I'm looking to probably start, like either taking some profit, maybe selling some covered calls against my share positions. You could even just assume that, at some point, I think NEO is going to probably trade at $16 again, because you can see that it hit that level before. I think there's even a gap up here, right? So there's like a gap. So maybe it's at 9.59. That's where I want to start selling covered calls, not 8. There's a gap there, so bears are going to defend it. But if it gets through this gap, then, I think $13 to $16 is really possible. And what I could do is when it gets to like $9.60, say we hit this bear gap, I could sell long dated call options against my other call options as well as my share position. And then I'm kind of just sitting in the position, right? I take a bunch of profit off the table. If NEO continues higher, I'm still going to participate as NEO continues to push higher. And if as long as it closes below like 16, not only am I going to collect all the premium of all the contracts that I sold when it was at 9.59, if I sold the $16 calls a year out, but I'm going to appreciate on all the shares, collect all the premium, and then if it is trading over 16, I'm going to sell my whole position and just take profit on everything. I could roll it further out, or it's trading below that and I just collected all the premium and I still have my total position as well. So you could kind of just like grow your account, say the challenge account, it's going to, with the options plus the share position that I have, if we get to this 9.59 level, it'll probably like triple or quadruple, maybe even 5 times my position, depending on how quickly it gets there. And then, say that $4,000 position turns to $20,000, then I could take profit out of that position of say like $3 or $4,000. And then as long as NEO pushes back up to like $16, I'll like double my account again. I wouldn't even care if it closed above $16. So there's a lot that you can do with options, especially with having a big position, riding it up. And then once the premiums are spiked to the upside, you're deep in the money on a lot of these call positions. Maybe there's not as much value or extrinsic value in that position. And then you can just sell longer dated call options against it. And then just hopefully NEO just continues higher over time and you'll more than double your account at that point. So, you can move on to other things and start investing into other stocks with the money that you do take out. So that's something to consider as well. Grab, this one held the lower trend line, so it did sneak back down there on the 25th. And then we just had that big punch to the upside. We're back over this previous downtrend breakout point that has been invalidated a bunch of times. I wouldn't put a lot of stock into this. We're probably going to form something a bit different. And the way that I would look at this is just looking at the most recent trend lines. Right now we're kind of going into this like wedge, right? From November of 2024 until now, we're probably going to trade within this range. And then at some point, hopefully, because I am a long-term believer in Grab, maybe it happens sometime around the May earnings date, is that we'll push through this $5.67 level, which is this bear gap that's still holding as resistance here as well. And then we'll be off into the races to 6, 7, and then eventually even $10 in maybe towards the end of this year, Q3, Q4, depending on how earnings go, see if we get some buyers in here. But there's a lot of open interest on this position. So I really like Grab for the long term. And then GDRX, this is just like an options play that I'm looking at. It's kind of beaten down a bit. There was some big flow here, so we'll see how earnings do. Tech is the other one. This is kind of like in a falling wedge. 41 is support. This didn't have quite the jump that I wanted it to have. This is until March 14th, so I'm starting to bleed a little bit on those. FCX, I'm a bit more bullish on because I have May dates. So there's a lot of time here for this to get back up to this $40 level. And then you can see some levels there as well. So, right now the market is in a volatile place. I do like China still, like BABA. I have a ton of shares, some leaps. It needs to get over this 143 to 156 gap. Once it actually fills that in, we'll probably push to 208. But I like these other small cap companies right now rather than the Mag 7. And the reason behind that is those stocks have gone up so much. They own the whole market. Emerging markets have underperformed relative to U.S. equities. And so, Mags is starting to break down. You see it here. It was forming this previous wedge. We broke down. Same thing with Bitcoin. We are heading lower. We might find some support here at like 50 or 49. And then, I'm eyeing Tesla. If we get to this 275 level, it's like the previous breakout point, that level, as well as this trend. That could act as really strong support. We also have a gap here as well. So bulls are going to step in, try to defend that gap right around 276 to 280. That'd be a good place to try to play a bounce back up to 310, even to 325. So I'm just throwing out a couple different things here I'm looking at. And then same thing with Apple. This one I do think will head a bit lower, probably hit this 237, maybe even 234 level. If it breaks below this pattern, we can take a trip all the way back down to like 220s. So, just trying to stay flexible as much as possible, size down where you can. And then, of course, like with both tech and with the S&P 500, there's a ton of volume on this breakdown. We've been selling intraday on most days, not quite the gap downs and then rallies that we were having over the last month. Now it's kind of flipped to the opposite. Maybe we actually push higher than we sell throughout the day into the close. But really, I'm looking for that big capitulation move. And like I said, I'll be posting about it in my Discord and we'll play the bounce there. But both SPY and QQQ have these gaps below acting as support. If we break those down, there's going to be a big sell day, and then that's going to mark the bottom, and it'll most likely be near the support or trend lines. So hope you learned something here. I know I kind of hammered it a little bit, trying to hammer the point home. But like I said, subscribe, like the video, drop any comments, hit me in the Discord, and I'll answer any questions, and I'll see you in the next video, guys. Peace.